You went from a 24 unit to then saying or committing to, and obviously not closing, but committing to a 458 and then closing on a 350. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Prashant Kumar. Prashant, how are you doing today?
Very good, Todd. Excited to be here today.
Absolutely. Well, looking forward to this conversation. A little bit about Prashant. He's the founder and managing partner of My Realty Gains, and the goal is to acquire and hold stable income-producing multifamily apartment complexes and assisted living properties in emerging U.S. markets with long-term capital appreciation and awesome asset management. Is that kind of summarize what you're doing?
That is absolutely correct. I've been doing multifamily syndications for last 7-8 years, and for last 3 years I've been doing assisted living projects, and we are getting deeper into them.
Awesome. Take me back to like just your kind of humble beginnings. What made you get into this business? What were you doing a little bit before this business, and then we'll roll in.
Basically, I started doing, like everybody else, single family, homes. And I was brought in to the real estate by accident by one of my close friends. And he said, "Look, Prashant, go buy stuff." And I ended up buying 3 single family homes in a year. And I realized that, it's not worth my time. It takes me 2 to 3 months to buy a single family home.
Yeah.
And the next thing you realize, man, it's just not worth. I mean, I make $100, $200 a home.
Yeah.
So I moved into multifamily. Same year I bought multifamily, and it was the easiest transaction of my life, probably. It was a small multifamily, 24 unit.
Okay.
From the day I saw the property till I closed, it was 18 days. And it took me 5 minutes to create my personal, PFS and SREO. And that's all bank needed, my W-2, whatever at that time. And I got the loan, and I said, man, this is super. I would make $2,000 from this, $2,000, $3,000 per month from this multifamily. But again, you have only so much dry powder, right? I mean, how much can you buy? And that's how I got into multifamily syndication. I started going to all these boot camps, and that's where I guess probably I met you, Todd, way back then. And, you end up learning, how to use others' money, right? I mean, and I got passionate about it. And that's how it started. My first deal was actually 458 units, the syndication. But of course, with other general partners, that's how I started. And, we made some mistakes along the way. Obviously, like everybody else, you lose money here, you gain other places. A couple of years, I did that part-time, but, as we were talking, I'm passionate about learning and all that. I became CCIM, and, then I said, listen, guys, I just have enough on my plate now, so I have to quit. So I'm full-time into real estate for some time now.
That's great. I think I might remember that 458 units. So walk me through, this is your first deal, 458 units. Of course, like you said, you had some partners. It wasn't all just you, but walk me through, a little bit of details on that deal. And then how did it even come about?
Yeah. So really speaking, that deal had not worked out. So I will take my word back, but I did end up doing another deal because of that 458 unit.
So that deal got presented to you. You were working on it. It never ended up coming together, but it was it kind of pushed you into that avenue. That's what you're saying?
That is exactly what I'm saying.
Gotcha.
The deal was presented to me. I said, like I met you, I had met other folks also. And I told them, guys, I'm here to learn. Okay. I will do whatever you want me to do to help you out. And of course, I was making good money. I had balance sheet. I had invested money. So they needed earnest money. they needed LP capital. I had a bunch of friends who wanted to invest the money. So I potentially helped in all aspects of the deal, in negotiating, not so much on negotiating, but more on the, like dealing with attorneys and insurances, property management companies, interviewing all of them.
Hmm.
It was a tough deal. It was a hairy deal. Let's put it this way. It was a hairy deal. We had a private equity partner in that group, in that deal also, who was bringing maybe 5 million. I don't remember it now, around that much. And we had raised about 5 million ourselves. It took a long time, like 4 months for us to do. We worked hard, and it was about to be closed on a Friday night. I think Thursday midnight, private equity guy called us, and he said he doesn't want to do the deal with us.
Wow.
So I mean, all that was done, and you get retreated like that.
Wow.
And he said he will do the deal by himself.
So he just said, "Hey, I'm not doing the deal with you guys. I'm good. I want to do it by myself."
Yeah.
And
No, I
that
mean,
was it.
the good thing was, he said, guys, I'm not going to do the deal with you. And we had no option. We had $300,000
Yeah.
hard in that money, in that deal. And we would have lost that money the next day morning. It would have disappeared. There was no way we could have arranged $5 million from somewhere else. But the guy was good. The only thing I should say is he was genuine, not genuine in this. I mean, he said, you guys have done so much work. Let me pay you how much you have spent, and let me give you 1% finder fee also. So all in all, yes, I made 50,000 from that experience for 4 months of, I got my money back, and I made some money during that time for that deal. I would have made a lot more. But I had all the investors' money in my pocket, and I had, a little bit of, what I made. So that deal went by. It took me a week or two to kind of reconcile myself.
Yeah, because I mean, it kind of. I don't know. Obviously, we're telling a shortened version, but it just sounds like dirty pool right there. How did that not sour you and go, I'm not, forget
Yeah.
it.
Yes.
You
Yes.
know,
I mean,
I got to deal with guys like this who are just going to swipe a deal from me.
yeah. Yeah. It happens. I mean, it has happened. I mean, it was really bad experience.
Yeah.
But I mean, there are good things. When there are good things in the world, you have bad things also. So I cannot just, demoralize myself and stop. I mean, I was upset, right? Like really upset, what you are saying, but
Yeah, rightfully
maybe,
so.
yeah, rightfully so, right? But the good thing happened right after that. Because of this deal, I had made so many contacts in the market. There was another deal which was closing, and the guy came running. Hey, Prashant, I'm closing this deal and I need, I don't know, 2 million, 3 million. Can you help? And I'm going to lose 500,000 of my money. And we just quickly underwrote that deal, and convinced our investors to move the money from that deal to this deal directly. And it worked out. I mean, my investors ended up making probably 80% return
Wow.
in about 2 years.
Wow.
So that was a start. I mean, that was also like 350 unit project for
Wow.
us. But of course, at a lesser capacity, we were more of co-GP, while in the first one, we were more of sponsor. But that is my journey.
Were you intimidated at doing a 458 or 350 unit? Like, were you at all intimidated by that, or did it feel like a natural step?
I think the step from 458 to 350, is that what you are asking?
No,
Or
step from 24 units to 458 or
yeah.
because I mean, you went from 24. It sounds like you went from a 24 unit to then saying or committing to, and obviously not closing, but committing to a 458 and then closing on a 350.
Yeah, it was a little bit intimidating at that time. Um, the only thing is, I had very good partners. One of my partner, who actually is my neighbor also, not so much, within the same town. I trust him very much. He was in the first deal, and he was in the second deal also with me. So I kind of trusted him, and I said, man, I have to follow something, right? Somebody, right? So I just followed him. I just hold his hand. I still hold his hand. He, we still go for walks in the morning together. Discussing business every day. So I said, I have to follow somebody, right? Like I would follow you. If you were my mentor, I'll just hold your hand. I would not leave it. That's the only way I could grow out of it, right? I was doing my W-2 work. I was getting paid enough. It's not that it was not about money for some reason. It was more about passion to do something. Um, and in the second deal, it was a little easier because I did not sign on the loan. Looking back, if I think about it, maybe it was okay that I came out of 458 unit. I don't know how it did. I did not track it, but we had signed on the loan also on that. So yeah, you have to take steps, right? You have to be courageous you have to take bold steps to go to the next level.
Yeah.
And that's how I was motivated. I don't want to brag about myself, but that's what I did. I ended up doing.
It sounds like you really grabbed on to surrounding yourself with kind of the right people. How did you go about finding those people to be able to partner with, be able to learn from?
I think it is all about networking, right? Like we and I and you are talking and meeting after such a long time, and you still remember me. But when you go and meet these people day in day out, on various, I ended up attending seven boot camps in 7 months.
Hmm.
So a lot of networking. I used to fly. So what I used to do is, Thursday, go from, instead of going home, I would go to a boot camp, and then on Sunday, instead of going home, I would go back to my client location. So one weekend I used to skip to attend once a month, that kind of thing. So it was a lot of networking. You just, when you are out there, you put yourself out there, and the goal, and even today, I don't think my goal is to make money. It is more to do which I like most. I used to get paid, upward of, maybe $250,000, maybe more. A lot more, a lot of money. But you are in that bureaucracy.
Yep.
You have to get up. You have to say some. You have to report to somebody. I'm a little bit. I was starting to take a step back from that. I was not liking it too much. And here I was my own boss. Whatever I need to do. So and money started to come in. Even 5 months worth of work on that deal, I made a few bucks, which kind of motivated me even more, right? So that's how it is.
Yeah. To take me through that first capital raise, what did you do anything special? Do you feel like anything that you learned from that capital raise that you can pass on?
Well, a lot of people say that they are coming with you, and then they don't show up at that last moment. You know that, right?
Mm.
So
Yeah.
yeah, our target is always 1.25 times of what we have to raise.
Hmm.
At least 1.25 times. If you don't have that target, you're not going to be able to raise what you need.
Hmm.
And obviously, I did not have many connections that time, and even today, maybe I don't have that many connections yet. But when you meet people, your friend, fortunately, my friend circle, everybody in my whom I knew in was making what I was making in
Sure.
that range,
Sure.
in that range. So if I go to somebody and say, guys, your money is sitting idle in your bank account, do you want to make 10% on your money? uh, you know, Obviously analyzed. There are a lot of people who said yes.
Yep.
So I was able to raise, $1 million easily. When I say easy, it doesn't mean that it just came. I had to make a lot of phone calls.
The money just didn't rain down on you.
It doesn't. It never rains, right? It never rains. You have to grab it.
Yeah.
You have to find the right people. You look at your phone and you start making phone. You leave no stone unturned. My mind doesn't stop unless I unless I'm done with that capital raise. Even today, if I had to raise 2 million, I just have to continue to do it, continue to pound it, emails, text, my video message. You just have to do it, right? That's the nature of business.
Yeah.
I don't have, I have some equity groups who are interested in our groups now, in our projects now, but you have to remain in that mode all the time.
It's funny that this environment's been so easy over the last few years to raise money. It feels like it just haven't had to put that much effort into it. And recently it's tightened up a lot.
Yeah.
People are a
Yes.
little more.
People,
I don't know if have you had that same experience? Have you done a raise recently and had that same experience?
I'm doing that raise right now, and,
Yeah.
and people have, oh man, interest rates are rising. What are you going to do?
Yeah. Yeah.
Right?
I haven't made a phone call on a capital raise. When we're doing a capital raise, we put out our webinar and that deal becomes live to our investor network. I haven't done a phone call, text message, or a second email in years.
Wow.
And the money just comes in. And
Mhm.
we just did a deal recently and it was so weird. I had to actually pick up the phone and
Wow.
start calling people. And it was just because the same, the market's changed. People are
Yeah.
nervous.
Yeah.
And I think those who are trying to raise capital, if you're listening, you've got to put the work into it. You got to put the effort into it. You've got to network like Prashant has been doing over the last many years. And you can't just assume. I think a lot of people assume they can raise the money because they know people that have money.
That's not truth. There's no truth with that, basically.
Yeah. How do you convert? You've got these people that you looked at your phone and you said, all right, that person makes some good money. That person makes good money. I know them. I know them. How do you, what do you do to convert those people? Because just because they make good money, just because they have the money and they like even the idea of investing doesn't mean they're going to invest with you. So, how do you convert those people? Do you have any, I don't know, tips you can give us?
I think it would be too much for me to say if I knew the golden rule, because nobody has a golden rule, right? I mean, it is really hard work. One thing I do is, my strategy is I make a video message and I send it to everybody, right? I mean, on my
Like
phone.
through a text or what? How do you send it?
I do it through a text. There
Okay.
are various services, slide text, or somebody gave me another website also. So
Call
and
it
I
slight text.
slide text is a
Hmm.
text broadcasting, right? So I download everything. I mean, sometimes just send a text, guys, I have a lead coming up, SLYTEXT. And there is a service called, and I will let you know, Todd. I'm not remembering it right now. But if I make a small video, I can send it to, just make a video, and then if you have that app will send that to whomsoever you want to send it to in one go, rather than you
Yeah.
sending it separately. So if you do that, at least you have told the world that you have a deal, right? And then you sit tight for a day or two, and then you send another one after a week. So it's like warming up the leads.
Mm-hmm.
The guys who don't want to invest, it's better that they don't invest, because there are many people, who becomes more of a pain than a passive investor. They are not passive investor. They want to know everything, oh, when is my check coming? What is happening in the deal? So, nothing
How do
against.
you navigate that? Have you had that happen to you yet?
Oh, that happens all the time.
How do you navigate through the pesky, for lack of a better term, the
Yeah.
pesky investor that's maybe taking up all of your time when you know you're like, hey, you you've probably already answered the question. So how do you deal with that investor? Do you have any strategies?
I just remain humble, I just remain
Yeah.
humble. Hey, listen, I understand your concern. Whether you ask me the question or not, you are going to get it in the answer in the report anyway,
Yeah.
right? The
Yeah.
report is coming. You calling me every week doesn't really help you and me, because for this, I'll have to look into it, which will take me half an hour. I'm going to give you the answer in the report at month end anyway. So just hold on. Hold on. K1 is coming. When is the K1 coming? I said, whether you ask me or not, doesn't matter. I'm working on it. And I will give you the update as soon as I have one.
Yeah.
So I try to not hurt them, but give them something and tell them, yes, it is in works.
Mhm.
And slowly, at some point, they start trusting you.
Yeah.
It's just a diplomatic solution. It's not like you can fight with them because they are your investors.
Yeah.
You have their money, and you guard their money, whether they ask for it or not. It's just a mental satisfaction thing. So you just start, you sort of become I don't want to call it a salesperson, but it's more like a therapy
Yeah. Yeah.
therapy for them, right? So you say, you tell them, buddy, I'm working on it. You are on my top priority. You'll get an answer as soon as I have one,
Yeah.
and then you will get it. It's not that you're not going to get it. So sort of people, slowly start to understand that piece also.
Yeah, and that's key too, right? So some investors are just going to be nervous up front. I mean, they invested $50,000 or $100,000 or whatever it might be, and that's a lot of money.
Yeah.
And so they're nervous and they want to know what's happening with their money. I find just clear, consistent communication is going to help a lot. And
Yeah.
you might have some of those extra phone calls to start out with, but like you said, if you're providing the information, if you're being truthful,
Yeah.
likely those
Yeah.
questions are gonna just kind of go to the wayside after a while.
Yeah.
How often
Yeah.
are you communicating with your investors when I you send me a deal, I like it, and I go, hey, I'm gonna invest $100,000 into your deal. How often am I gonna hear from you?
See, if deal has not closed, if you have
Well,
said
after it's
that,
closed.
oh, after it's closed, mostly every month.
Okay.
Mostly every month, we have a report going out saying this is what is going on, this is the bad part, this is the good part, and we are meeting our projections, we are not meeting our projections. Are we going to do the distribution or not? If not, why not? And if there's anything bad, good, we just remain totally transparent, and we give them some good news also, so that they understand why it is delayed. And when it is delayed, when a distribution is delayed, when will it come, and potentially how much, if we knew. But
Yep.
I mean, you never know how much you're going to distribute. So we just try to remain truthful, and investors appreciate that. And you know that very well, right?
Prashant, one of your goals is or your promises or your whatever you want to call it is to provide sound and solid asset management to your properties.
Yeah.
How do you guys do that? How do you maybe differentiate yourself, or how do you make sure you're providing sound asset management so your properties are successful?
So the last three properties that we have acquired, I mean, we are very consistent on our communication. That's number one. And we have two asset managers who are working on it almost full time. I mean, one taking care of all the paperwork, second, very experienced person who looks at the deal, who does the management.
Mm-hmm.
And of course, we are involved in whatever capacity we are involved in. To be truthful, I would lie to if I say that we do the best asset management. Um, we are getting there. We have not been unsuccessful. We have been successful so far. Can we do better? Obviously, we can do much better in our projects. But overall, investors have been happy so far, because we have not failed them yet, right? I mean, we have not really failed yet. So I shouldn't say that we do the best asset management. I'm just very honest, straight from the horse's mouth. There are a lot of things that we can improve, but we do have consistent calls among ourselves, making sure the property management, we change our property manager if it doesn't work out. We are at a position where most of our properties are being managed by the same management company.
Mm.
So we are trying to achieve the synergies.
Yeah.
Similarly, all the accounting is happening by one company, so we are achieving synergies there. So what investors see across the properties, they know what those numbers mean. I mean, how the report looks like. All the reports look similar in a similar format. So all that is coming along, and I'm pretty sure in future we'll do much better.
I like that attitude, right? You're not, you realize you're not perfect. You can always get better, but you have that awareness about yourself. And so you guys are always working on it. You're trying to figure out different ways, better ways to continue to improve. I think that's so valuable.
Yeah, that's, I mean, our goal, as I said, we were talking earlier, is not just to make money. Money will come, right? I mean, maybe it won't come this year, but it will come, right? So that's all it is. Money is not an important aspect. Squeezing pennies is not an important aspect. Better quality tenants, better assets, better places for tenants to live. And when tenants have better places to live, then they obviously pay higher rents, and higher rents drive everything. So that's has been our goal. But like that the market is very challenging. Lot of a lot of turmoil going on, a lot of competition out there, right? I mean, you cannot find anything below $100,000 a door. I mean, there's nothing called $100,000 a door anymore.
Yeah.
So I think we'll get there. It's just tough time, right now. The market conditions, and that's how it is in all the recession. Maybe I'm going in a different direction, but the recession, whether it's a bear market or not, it shall pass too, right? I mean, it shall pass too in a year or two. Things will change, and by the time, hopefully, we have gained that much momentum to do better for future.
Yeah, I think people forget the average recession lasts around 9 months, right?
Yeah, see?
So whether
Yeah,
we're in a recession right now or not, or going to be heading into one, the likelihood is that it's going to last, between 6 and 12 months.
that's all.
That's just kind of reality. Now, could it last longer? Sure, it could. Could it
Yeah,
last last time? Absolutely. But
yes, yeah,
reality says, or history says, it's probably somewhere between that 6 and 12 month mark, and then things to start to shake out again. So it's not all doom and gloom. I know the news makes it sound like all doom and gloom, but it's not all doom and gloom out there.
yeah. I mean, you have to look at the brighter side, right? You may be sitting with your money in your bank account, and the money devaluating every day by a percent, with a 10 or 12% inflation, or even 8% inflation. Your money is losing value at least 0.65% every month.
Yeah.
So all in all, you want your money to work, right? I mean, you put the money. Maybe because of that fear, a lot of people are backing off a lot of deals. I mean, you are buying hopefully deals slightly cheaper than what normally you would buy it for. We invest in them, and we, it takes a year at least to kind of get in a deal and do things, right? Anytime you get into a deal, you don't come out, at least in first year you never come out, right? It takes more than that time anyway.
Yeah.
2 years, maybe after 2 to 3 years is the ideal time when you would come out. So why not make your money work starting now? I mean,
Right.
why would you wait for recession to be over, and you losing 10% of your money, while the money is sitting in the bank account?
Yeah, especially in this environment, like you said. I mean, it's different when inflation is only eroding your dollar by 2%, but when it's eroding it by 8 to 10%, that makes a
Yeah,
big difference really, really quickly. It starts to
yeah,
add up. It's like there's that snowball that just starts to really build, become a big problem pretty quickly.
yeah.
You mentioned before the call we were talking, and you're doing some assisted living. You owned some smaller assisted. We can talk about that, but now you're doing some pretty interesting projects. Let's dive in there if that's okay. I want to talk about kind of the projects you're doing and why assisted. What made you think that, hey, senior housing is a good avenue, and you want to take a stab and a run at it?
See, I mean, I think I do not know why I'm getting into assisted living, why I got into assisted living to begin with. I think that it is probably a little bit more because of the nature, the humbleness. And again, I don't want to brag about myself in any way. That's not my goal. but I grew up with my grandfather all the time. I mean, all the years, of my life, he was with us. And I have very great affection to elders. I get along elderly people very much. That's like my forte. I don't get along with my folks next, with my age, but with elderly people, I do get along very well. So, I mean, in a way, I wanted to do something for elderly care. Let's just put it this way. And that's how, I mean, while multifamily, we were doing multifamily, we said, let's do some assisted living as a pilot project and see where it goes.
Yeah.
So we bought, 3 assisted living single family homes as a pilot project to learn the business, to know what could go wrong in that business. And it took about 3 years. I don't think we lost any money, but we did not make money there, and which is okay. I mean, because we bought tough properties, they had to be rehabbed and stuff like that. There was no fault of anybody there, but we can find out the potential. Potential is pretty high. Every day, a lot of people are becoming 80 plus. That's going to be a silver tsunami over the next 5 to 10 years.
Yep.
A lot of baby movers are getting to that age, and construction is not keeping up. So demand is growing basically in assisted living space.
Yeah.
So
over 1 million people are going to be turning 80 plus by 2027 compared to 300,000 today.
Yeah. Here you go. So that's per year, right? And you give that statistic.
Per year. Over 1 million in people per year turn 80 plus by 2027.
Yeah.
So it's 3x.
3x. Yeah. So you can imagine how much is going to be the demand, and supply is not there.
Supply is not there, not to handle that. Supply is there to handle what we have right now, not what's coming.
Yeah. Supply is not there. And because of that, it's a good space to be in. I mean, we do 3 deals in multifamily. If you do 1 deal correctly in assisted living, you probably can make that kind of returns. Yeah. I mean, better returns. I mean, just better returns. Nobody. See, the fundamental thing is nobody is getting younger. We all are aging, right? I mean, nobody's getting younger. That's the fundamental. And that's the target market. Everybody needs space to live, right? Multifamily is there, and at the same time, everybody is going to need care. Mm-hmm. And you get in and do your best, basically. I mean, again, my mindset is not just to make money, but these projects you have tremendous cash flow if you can do it correctly. You can, yeah.
So these projects that you got going on right now, ground up development, existing buildings, what are you doing?
So I am not doing ground up development because I'm not a builder. I know nothing about how to build. I do not know how to swing a hammer. So what I'm really doing is I am converting places into assisted living where demand is much higher than supply. The project there's one project which I'm doing in Arizona right now. There, the demand is 3 times the supply, and supply includes the supply that I'm creating. So even if I create 150 beds supply, demand, the overall supply is 250, including my 150 beds, and overall demand is 750 beds. So, I mean, that's like a no-brainer. If I could make it work, chances of us getting that filled is pretty steep, pretty good. Similarly, the other project which I'm doing, I bought at a very good cost basis, $8.1 million building. I bought it for 1.7 million because the seller didn't want to do anything. He's more of a construction guy. He said, Prashant, just take it from me. And we were in contract for a long time. Very humble guy. He said, just take this thing and run with it. He's into construction. He said, I don't want to do anything related to medical. for whatever reason. So you find a good cost basis, and then you convert. Yes, obviously you put a lot of money. You convert it, and then you look at the demand first. We
Yeah.
have double the demand
Where,
than
where,
supply.
where are you going to find that information? How do you know that there's demand there?
That's your cost of doing business. You engage consultants. You engage. I
So
mean, you
you're
can.
you're hiring that out to get
Yeah.
market data research.
Yes. I mean, you can look at NIC data.
Yeah.
NIC data. .com. But that information comes mostly from consultants, or from
Yep.
your property management company. When you locate a property, you will go to your operator and tell, listen, buddy, give me some information about this property. How's it looking? How's the demand in this area?
Yeah.
And they have access to all those databases, right? I mean, I don't even know what they are. And now I know. Basically, I go to ISRI, and being a CCIM,
Yeah.
I look at CCIM data, do the profiling. How much is the population? How much is the population above 80? How much of them is above the medium income? And then you kind of say that, okay, this is kind of derive some demand from that data, right? Once you derive some demand, and then you look at the supply. I mean,
Yeah.
supply is mostly available, and then you see whether it makes sense to do a business project here or not, right? So I mean, I mean, whether you look at it or not, bank is going to look at it anyway,
Yeah.
right?
Right.
Bank wants the.
They want to see those reports, and getting financing is going to be a lot easier if they can see the reports. They can see why you like that building, and especially when you're doing a redevelopment, you're taking a hotel or taking something that's a different use and you're converting it. They want to know, why do you think this is successful? Because you're
Yeah.
putting new units online, and just because other people are 90% occupied doesn't mean you can be.
Yeah, no, this is true. I mean, you have to have the case.
Yeah.
Basically, your operator. I'm not an operator.
Yeah.
You bring your operator in the deal in some capacity, and then you kind of say that they have the equity ownership or whatever, or to give the partnership, and somebody who has done it before. I don't have that experience. You kind of build that experience having right partners,
Yeah.
and then you go to the bank.
Prashant, what's a mistake that you've made along this journey? How have you learned from it? How can you teach our audience?
See, one thing I must say, that learn to walk before you run,
Hmm.
right? It
Did you run into
looks.
something? Did you
I
learn like that?
Yes, I ended up. I mean, the first deal, right?
Yeah.
First deal, we didn't know, how to deal with the equity partners,
Mm,
right? And so one is that. Okay, I'll get back to that your question. One is learn to walk before you run. Number one. Number two, have a mentor or surround yourself with the right people. You know, if you are getting in a deal, have somebody hold your hand so that you do not make mistakes. Because if you make a mistake, those mistakes will be very costly,
yeah.
right? So,
Yeah.
and I'll explain why I said that. Yeah, it is easy to. I mean, yeah, buying a 24 unit is easy, but buying a 450 unit is very difficult, right? You do not know anything, right? It takes, and you can make mistake. You do not know how to negotiate with your seller. You do not know how to negotiate with your lender. Lender can retrade you anytime.
Yeah.
Seller can. I mean, property management company retraded us. Forget about lender. So, so everybody can, because everybody is looking after their interest. So you have to establish yourself before you go into bigger deals. That's my number one thing. Second is, what I said, surround yourself with the right people.
Yeah.
People like yourself, or the mastermind group. You get in and discuss your deals with them. There's no need for you to do the whole deal yourself.
Yeah. Yeah. Well, and just having that second set of eyes, right? I look at the first kind of big deal that I did, and just having that second set of eyes on it to say, hey, did you think about this? Did you think about that? Hey, have you looked at this? It's so valuable because it's so easy to make something look good on paper,
Oh, yeah.
but it's got to look good in reality. And
It
that's the
has to. It
right.
has
That's
to.
the key.
That's the key. That's the key. And things go bad,
Yeah.
and they can go bad very quickly in a moment's time. You may
Yeah.
be happy right now, and 2 hours, I mean, after the next call, your lender says, I'm dropping off. You're done, right?
Yeah.
I mean, your hard money is gone.
Yeah.
I mean, have the right attorney around you, who could stand by you.
Hmm.
There are tons of attorney. There are a lot of them who do not know what to do when the situation arises. So you have to have the right attorney,
Yeah.
right partners, right second set of eyes,
Yeah.
because like everything else, it's a risky business too. I
Yeah.
mean, it's not
Absolutely.
that it's not, there's no risk. Those who are operators, they know, and you know it very well, uh, in my mind.
Yeah. Prashant, I got a couple last questions and we're going to wrap up. What's a favorite book? Business, real estate, just something mindset, whatever, something you really like.
See, I never said that. I never mentioned on this podcast. I'm a trainer. I'm a meditation trainer. I train people to gain peace.
Mm,
And that's just a passion of mine.
yeah.
I live for it. I don't. There's no money. I never charge any money for that. I would do it for my life. That's like my highest priority in my life, to serve, so to say. I come from that mindset. Um, and there is a book called The Heartfulness Way. Very simple book, $10 book or whatever. And I like that book very much. And there are a bunch of books, obviously. It's one of the Amazon best-selling book, The Heartfulness Way, very simply written. That's sort of my favorite book. I mean, there are many more. In business, I've not read many books. I have learned talking to folks like you
Yeah.
on the podcast, uh, but I don't read too much. I just, I'm that kind of person, visual and talking kind of person,
Sure.
where I learn from
Well, we all learn different
actions.
ways too, right?
Yeah,
I mean, you just got to know how you learn. Sitting down and reading a book might work for some people, it might not work for others. So,
yeah,
definitely, if you're more, hey, visual, I got to hear it, I got to talk to people, that's what's going to work the best.
yeah.
Last question. What are your three pillars of wealth creation? Three pillars.
See, mindset is definitely number one. If you confine yourself, not taking action, mindset, obviously, and the hard work. You have to have the right mindset, broad mindset, ability to accept challenges,
Yep.
right? You see the bigger deal, you jump onto it. You may not do it, but give your best shot to do it, right? I mean,
Right.
and that comes from the mindset. I have seen. Okay, I'll give an example. I bought a 72 unit for myself, and I brought it to my partner, and he looked at it. He said, "No, I'm not going to do it."
Hmm.
He just said no after looking at it at 5 minutes. I ended up doing it myself. I just bought it for myself. And that's my best cash flowing asset.
Hmm.
I've doubled or potentially 2.5 times my money on this without doing anything.
Hmm.
The best cash flowing asset. So you never know where the opportunity may come. So the world is like that. You have to remain open and vigilant where you can find a good deal.
Hmm. Love it.
That's I think that was due to mindset only I could buy that deal.
Yeah.
I mean, at that time, buying a 72 unit was a big deal for me myself. I mean, from my savings. But I think that's the best thing I did. I could actually even retire because of that.
Yeah.
And obviously hard work, and networking. These are the three things that I think they go a long way. Your network is your net worth, they say it.
Yeah, for sure. Yeah. Mindset, hard work, networking. All three super valuable things if you're going to want to be successful in business and happy probably. So,
Yeah.
Prashant, really appreciate the time you've been able to spend with us. A lot of great information, fun story. I just love that you went out and you did something bold. You go from buying some single families to a 24 unit to a 458 unit deal that you didn't do, but you learned a ton from, to then turning that 458 unit, uh, you know, failure, for lack of a better term, to a 350 unit success story. And then well beyond that, of course. So really appreciate the time you've spent with us, the stories, a lot of valuable insight that you've been able to give to our listeners. So again, appreciate it, and you have a fantastic rest of the day.
You too, Todd. Thanks for taking time to interview me here on your podcast today.
Yeah, absolutely. And then, how can our listeners get in touch with you, learn more about what you got going on?
I have my website, myrealtygains.com. I mean, somewhere at the back, myrealtygains.com. And that's my, email ID also, Prashant at myrealtygains.com. And I
Awesome.
have a small portal. You can schedule a call with me right there.
Awesome. All right. Take care, my friend.
Todd, thank you so much again.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.